Futures point to a higher open following a $125 billion bailout for Spanish banks announced over the weekend. Expect volatility and volume to be elevated this week as Friday is quad witching and there are multiple broker conferences and industry events, including WWDC. I'm Jill Malandrino, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Jill Malandrino with The Street, and together we bring you the morning call. Scott, we had an interesting week last week. We're up 3.7% on the S&P, got some participation with the financials. Then over the weekend, the futures shot up with the $125 billion Spanish bank announcement. So what we're going to have to look for this week as traders, is there any conviction with this move, or are we just kicking the can down the road?
I think at this point we're not going to really know whether they're kicking the can down the road yet. Every obstacle has been met with the rally, but then every time we get overbought enough, we get the next obstacle. So right now Spain, is somewhat solved, they think, but obviously there's no details whatsoever. So the market got very excited over the weekend because some people thought the bank run would take over, that the extreme situation would take place, and that hasn't happened yet. But overall, tactically, the market's been trading very well, whether you are a short or a long, but it's really just how you enter and exit, which I think is something we need to go over, Jill.
Yeah, we definitely have to take a look at that. But my concern is after we saw that announcement come out, commodities shot through the roof. And what that means, guys, is gas prices go up, the underlyings go up, which gets passed on to the consumer. So while this bank move might benefit your larger institutional players, especially those guys working with the futures, it doesn't necessarily mean that it's going to improve the situation overall. But let's take a look at the SPX from last week. And also, we noticed a two-year pattern that I want to show everyone as well.
Yeah, so first, if you go on a micro basis, you could see how tactically those that follow chart patterns and use moving averages were fine. If you take a quick look at the chart here, we've gone over this so many times. I hate to beat a dead horse, but this was the head and shoulders top pattern that we tried to go over so many times. This is when IBD put us in a correction. That was 1360. You could have sold stock out of the way for what was a move down to below 1300, almost 100 handles or so. And then what happened? We broke below the 200-day, which if you remember, we said, if you missed your sell signals along the way on the way down, breaking below the 200-day, you're probably a little late to get rid of longs. And then when we reclaimed it right here on, June 5th, this was a spot to cover shorts if you wrote it down. This was a spot to test some longs. So here's a tactical spot to test some longs. Friday we gapped down and we held higher. We held the top third. So those were two decent entries. So to enter when we're up 10, 12 handles into bigger resistance that I see here at 1340, 1345, I just don't think tactically it makes sense.
So we can quickly show everyone the 2-year, because one of the things that we were speaking about earlier was, well, when do you think we get out of this choppy kind of unconstructive action? And you and I were both saying it looks like it'll probably be the beginning of October, like we've seen that pattern over the longer term.
Well, the last two summers we dealt with a lot of the same problems, and little by little they took, they solved one problem, and there was another one, from country to country. So what you saw was there was about 5 to 7, like 6 to 10% moves that were all very tradable. So far this summer, we've seen the down move, we've seen the bounce back. So the question is, can you pay up, which would be today, which I don't think so. The same way, if you press below 1300, you got in trouble. So if you look here at the longer term chart, let me show you something. If you go back to last summer, I remember being on TV talking about it. This was August. It happened actually a little earlier. Look how many times this range was maneuvered. So if you go here, this was 1100. We went back to almost 1200, 100 handles. As if you chase this, you got hurt. Okay, and then from here again, it went up to, what is this? About 1230. And then we came down 100 handles. So basically 1, 2, 3, 4, 5, 6, about 7 times you could have made where we moved 100 handles, both long and short, where you could have taken out 2 to 3% in the middle, not trying to find the bottom or the top. And then if you go back to the previous summer, which is right here, look at this. It started actually where we started when you had the sell-off in May, and then you had 1, 2, 3, 4, 5 different ranges that were well above 100 handles, that if you bought at the top end, you got hurt. If you shorted at the bottom end, you got hurt, vice versa. So right now, if you fast forward to where we are here, okay, why would you be chasing this first move to the upside? Even if we go up to here, you still could see a lot more choppy action as we deal with Greece in a week and a change, as we deal with Italy that's going to need a package, as we deal with the details in Spain, which we still haven't had yet.
Yeah, no, I agree with you 100%. And I think, the charts tell it all, Scott. Let's move along into the sector spotlight, the ag space, my 2012 pick. We knew Q1, Q2 would be choppy. I think Q3, Q4 is going to get really interesting here. Tomorrow, we have the World Agricultural Supply and Demand Expectation Report. Traders think the government's overshooting this one a bit. There's a lot of drought issues in the Midwest, so the more of these crops come in, the supplies come down, the demand for the fertilizer goes up, so I think it gets really interesting here. We're going to kick it off with AGU. They have their Analyst Day this week, and you know what? I know Piper's very positive on this name as well.
Okay, well, at this point, this one I wouldn't say is my favorite in the group, but it's holding up decent. If you take a look at the chart, you will see that you do have this lower range that has been maneuvered. It's not near the lows. It hasn't come all the way in like some others, but I didn't held higher this previous breakout. At this point, you do see some type of neckline / pivot resistance. So if it does get above 80 and this group gets going, it could ever move back to about 83. But overall, this is not a leader in the group. To me, it looks like a trade back into resistance. So if it's anything more than that, it's going to really need to prove itself.
All right. Well, they took up the dividend 120% last week, and they're really, continuing to expand on that balance sheet. So, we're looking for growth here. Moving along to CF, we did really well with this one in 2011. I know you guys love to trade this name. It's a very under-levered balance sheet, and I think that we're going to, we found some support in the name. Let's see where we can take it from here, though.
This chart looks similar to AGU, and it gives you times, and it gives you at least clues whether you should be long or short it. So if you take a look at the chart, I remember we were talking about a very positively nice, tight pattern here. This is when I was trading. I think I bought 188s and I might have sold 197s or so. I didn't stick around, but then when you had this outside day here, that was a sell signal. And then when you had this potent down move that engulfed this entire range, that was another sell signal. So 2 sell signals in a row could have got you out of the stock if you're a momentum player. Since then, it's corrected. It's going sideways here. I would guess same type of pattern here if it starts to get above, just like the market. If it starts getting above this 174.50, you then have room to the moving averages. But a lot of these all have the same patterns where moving averages are curling down. You're going to have big resistance. So you have to be very careful buying on any strength.
Moving along to Potash and Mosaic, we'll talk about these stocks at the same time because the charts really do look identical and fundamentally they're relatively the same as well. Both phosphate producers, these guys look from a relative and absolute valuation. They're pretty attractive right now and the metrics are lining up. We're really seeing the demand for their underlyings come back into the picture.
Well, if you're long POT as an investor, you're definitely not happy. This stock's at the lower end of the range. It's been battered and bruised. It's below on moving averages. This has been a classic sell signal. The whole entire high, lower, high, lower, high. Couldn't get above this resistance. Sold off, and this one is actually at lows. So relatively much weaker to the last 2 stocks that I showed you, but it sounds like it has fundamental reasons. So if you didn't get caught in this mess, yeah, I guess you could trade versus lower area, versus this, what is this, 36.73. And then if something exciting happens here, which I'm not sure exactly what that could be, maybe a better third, fourth quarter story, you can get a move back up here. But I would say if you're short, I would cover because it's not an area to be short. Even if you're trying to price it to new lows, this is the type of stock that can get those takeover bids again. And I think that you made your money short. And if you do have a thesis here and you fundamentally understand these stocks, then be in small, but they have yet to show any upside momentum or where you could buy them after a bit of a bounce.
Right. Well, just like with Mosaic, these, we did expect Q1 and Q2 volatility. So myself and a lot of my guys were playing some straddles on that. We did pretty good with that one. Let's wrap it up with Monsanto. This one has actually been a relative leader within the space.
Yeah, this one looks to me like traders would go to it. I probably, if anyone's talking ags, they'll probably be talking more Monsanto, more CF or an AGU, because look what you have here. Stock, investors here haven't been as battered and bruised. Look where the lows were back here in late September, early October. It's not even close. It's above the moving average. It's showing institutional support. So for traders, this is something I would focus on. As long as it stays above this little 77 or so area, you have big resistance coming in here. In a better market, if any of these stocks are even set to make new 52-week highs and reward investors, this one looks technically, best in class.
All right, well, we'll have to pay attention and see what comes out of that WASDE report in the AGU Analyst Day. We're going to go into a quick commercial, and when we come back, Scott and I dive into the trenches.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back to the morning call. We're going to dive into the trenches with the financials, which actually led the market last week, and we like to see that because you really want to get support from these bigger names. We're going to kick it off with JP Morgan and Barron's this weekend, the roundtable. It was the only financial big broker out of the Morgan Stanleys, the Citis, the Bank Americas that was mentioned as a holding among these top fund managers. This is really the one that they've still continued to go to.
Well, it also just shows you that they're the ones that got thrown for the biggest loop. No one was expecting to have this come out of JP Morgan. That's why when it came out, this stock, got battered and bruised. But just like we say, there are times to buy, there are times to sell. JP Morgan, finally last week, around Monday, Tuesday, we were talking about it. They came out and disclosed that they lost $4.2 billion versus what they said of $2 billion. But at that point, the market went from down 30 cents, or the stock went from down to up, showing you that maybe it was washed out, giving the banks a bounce, which also helped the market. So you put 1 + 1 together, and you could get a trade there. You look at the chart here, these guys were buying the whole way up, and they were blasted right here. Look at the size of that gap down. No one knew it was coming, and no one even bought it. If you look here, didn't even attempt to get filled. You had this lower range that got resolved to the downside, and then here was the day that it reversed. Here was the day that I would say if you were short, you covered. If you were nibbling or trying to nibble, this is a king-queens formation where you get a down bar matched by a red bar attached to it, finally news, so the news was out. And now, it's building a short-term inverted head and shoulders pattern, just like the markets, actually. Here's your left shoulder, here's your head, here's your right shoulder. So it's starting to give you this bottom pattern, but what it has to do is it has to break above this neckline, which it's opening a little bit above, and then really, it has some room to bounce back to 36. I would say if we do get a big rally at some point this summer or later, this is your playground for this stock. So if you didn't get caught in this mess, because it was, remember when it broke below the 10 and 20 day and that was your sell signal, you didn't have to know what was happening, in the backdrop of it. So questions are, if you sold it here and you're nibbling in the 32 area, you probably have a good buy. I would say short term, it fills this gap for a technical trader, which gives you 35, 46, but then it's going to take a lot of time before you see any real price appreciation where you can buy on a gap up versus nibbling into weakness.
Moving along to its peer, another big broker, Morgan Stanley. This one's been under pressure due to the Dodd-Frank Act legislation chatter. A lot of trading restrictions here, which could hurt Morgan Stanley's bottom line, but they are divesting a minority investment into commodity division, which is a huge driver of multi-billion-dollar revenue.
I think they had a lot more going against them than just that,
right.
But it could be a botched Facebook deal, it could be bad investments in European bonds or whatnot.
Trying to see if we could have a conversation not around Facebook.
All right. Anyway, from a bottom feeder standpoint, which is what these banks are right now, because they're not leading groups, they're not looking to break out. You're positioning into a weak group for the long term or some short-term trade. So if you look here at Morgan Stanley, you will see finally you had a bit of a reversal day the same day that JP Morgan bounced. So you see the group trades together. Then the following day you had some follow through, a decent gap up. I would say if you want to be long this stock, this is your out, 13 bucks. If you're looking for follow through with a bit of time holding above this area, if it starts to clear, what is this, 1427, at some point this year, maybe it gets back to 1577. But at this point, look at all these moving averages, look at all this resistance. If you sold it correctly into this mayhem crap over here, perhaps buying it for a dip or a tradable bounce is fine. But if it starts getting back below 1315, you know that it might even break these lows here of 1229.
Moving along to an exchange, and no, it's not NASDAQ, even though we just spoke about Facebook. We're going to look at CME. It continues to announce record-breaking futures products volume. And, that's welcome news, considering the exchanges have been beat up a little bit following the Facebook debacle.
True.
Debacle.
and if you look at this chart, this is something I want to show you because I think this is the type of chart you want to see in some of the other indices where if you go to it, you have a lower pivot that it broke above. So here, it's putting in this lower range, and look how many times this thing had to range before it finally broke above right here. Pretty clean. So it broke above, and then what did it do? It went into the moving averages, resistance, and it pulled in, but what did it do? It retested and held that prior this was resistance that becomes support, and now next time it tries to go through the moving averages, there's less resistance there because it ate away the supply, and then you can go. So it goes to show you, first time you get into some of those moving averages, it's a better sell, and then if it proves it could hold higher, then you get a little bit of follow through. So I would say above this 273 area, the next big resistance is 280. It looks a little bit better than some of the obviously banks there.
All right, let's wrap it up with Capital One Financials in the financial group. This one was up 2.8% on Friday, just finished its second acquisition of 2012, adding $2.8 billion to the balance sheet. So it looks like we're still continuing to grow with this one.
And this one is actually above the 200-day, it's above the 100-day, it's above the moving averages. So investors haven't been as battered and bruised. If you look at the chart here, you will see that here's a 200-day, it didn't make it down to it. It just reclaimed, I think it just reclaimed the 50-day moving average right around here, which is showing, actually no, 50 days right above it, so that could be some resistance. But it's okay. I personally like MA out of the credit cards a little bit better. This too also has a lot of resistance in front of it. Remember when this broke, it's coming right back to retest that. So at this point, a lot of these look the same, some a bit better than others. You know, CF and MasterCard look okay if the rally continues.
All right, let's move into quick hits or some quick cash. We're going to talk about Apple because it wouldn't be a morning call without. We have WWDC this week, guys, so we're going to see a lot of headlines coming out regarding Apple, the iMacs, the iPhones, if they're going to do any price manipulation here, what new products are going to be coming out. So this one's going to be more choppy than usual, I believe, this week.
Yeah, and it's been showing relative strength. This has been a vehicle for cash flow, a vehicle for swing traders, a vehicle for investors. That's why we always talk about it. And last week we started talking about the inverted head and shoulders pattern. If you look at it here, there you go. First, it held the 100-day. This was the buyable strategy for those with a longer-term plan. Remember, we talked how I got involved, 537. This was the 543. Had a quick move. Couldn't get above this resistance. Market wasn't ready. Pulled in, held higher, and then closed strong on Friday. So here's your left shoulder, here's your head, here's your right shoulder. Right now it's trying to break through this neckline. It's trying to get above 581, trying to clear the 50-day at 582.69. If it's up $4 right now. So if they can't sell it, and after today's event, if it closes strong, next small little area here is 600. That fills this open gap, which would obviously help the market. So I'd watch Apple, and if they can't sell it off, that will give some energy to tech and prove that maybe instead of just buying into extreme oversold conditions, you could buy things with some momentum. And Apple, I do believe, is investment quality. You could hold it and you could also trade it.
Moving along to Sandridge, an energy name, ticker SD. David Peltier of Stocks Under 10 over at the Street has been buying this one. And it was highlighted multiple times across Twitter feeds and multiple chat rooms last week especially.
Okay, well, I haven't seen it and I'm looking at it technically. Technically, to me, I don't know, look at the chart here. It put a little bit of a low below 6. I guess it could rally into this very noisy moving average scenario. So,
well, if oil continues to go up, you might get that bid potentially.
All right, there you go. Something for everyone. Maybe it gets to $7.
All right, let's move along to Las Vegas Sands. Casino names, and Red Dog is my go-to for Las Vegas Sands win and all of the above.
Yeah, well, this one proved that finally you get a bounce after getting fully destructed. And at this point, it's up 90 cents. Didn't bounce so well, so it shows you when you go after laggards or stocks that have been weaker, you could play them for bounces, but a lot of stocks are bouncing to be sold. Don't fall in as an investment or as a longer term trade because of a stock that just had a move. So that's why you need to know whether they're below the moving averages, where they are, how they've been acting. You look here at LVS. Here was your reversal bar. We talked about it on the radio, in the chat. Here is when it pushed below, came back above, and then finally you had a potent move to the upside. Look at this, resistance right at the moving averages. Couldn't get there at first, so that contained the move, but now what it's doing is it's holding higher. So the longer it stays above 44, and develops a pivot here, I think at some point this 47.60, 47.80 will be buyable, and then your next real level here is around 50 and change, and perhaps at some point 52. But right now, it's holding higher. It's not that compelling. You could take small trades, and if you sold correctly on this outside day or sold, when it broke, where was that 56 that we were talking about as a high level stop? Boom. You could reposition here, but you have to have some risk.
Moving along to McDonald's, fundamentally we know that it's been getting hit with the higher dollar, you have higher input costs, and at this time you just have to question, are you actually chasing yield? So Scott, what are the charts telling you at this point? Because it's definitely getting hit with those Chinese numbers falling. I feel like everything's predicated on China right now and lower consumer confidence, but
just goes to show you that sometimes you have to remove the name from the chart. And when trends break, they break. You get out of the way and you revisit. And if you look here at McDonald's, I remember talking about one day it gave you a big gap down and it just never recovered. But anyway, you have a trend that's been intact for so long here with McDonald's. And right here, it broke somewhat right around this 96. And before actually putting in this downtrend. So you have a high, lower high, lower high, lower high, all the way down, was controlled by this. And then once it broke this area, boom, and retested it hasn't looked back. And now McDonald's is below every moving average out there. It's lost a lot of institutional support. If you sold correctly and you think longer term it's a value play here, you could buy versus 86. Maybe it turns out to be more than just a trade. This is somewhat of a bottom formation here. So, buy versus 86. Perhaps if the market continues to rally, you get to move back to retest the low 90s. But it just shows you how even the best of the best have to be maneuvered. And overall, it's just have to be a bit more tactical. It doesn't matter what the name is.
All right, let's wrap it up with Shuffle Master, one of the gaming names. My options guys were actually pretty active in this one last week. They seem to think that it's a bit oversold, and implied volatility has really come in. And again, options are futures looking products, so it's interesting to see how this will play out because we haven't really spoken about this one that much.
I think when I saw them write the note, it was close to 12, so let's see how they did. So if you look here at the chart, there it is, close to 12, had a nice bounce back, so it was oversold. Good job, guys. Bit more room maybe into this 1550, 60. I think if you bought it here into this oversold nature, you sell some into this gap open around 1510.
All right, guys, we're going to have a busy week with this one. We have Quad Witching on Friday, WWDC. We have a bunch of other conferences, casino, ag names going on this week. Don't forget, catch Scott at the end of the day as he wraps up the charts on options, profits, real money, and T3Live.com.